we are going to share with you expertise and knowledge on how to deal with currency. All of the most important factors that you should know when sending money from country A to country B. And I'm so delighted to be joined by Steve Eakins, who is a key partner director at Lumon, and they process over 300 million per day in currency transactions. Steve, welcome.
Thank you for having me. Yes, we're really excited to talk about this and get some more presence out there to let more people know about the benefits of it all.
So let's start with, I'm going to buy a holiday home in France and I'm thinking about doing that next summer. What do I need to know? What are the key learnings that we should be telling and educating people about?
From a currency perspective, we'll generally be at the end of the list, which is totally wrong. The currency market is moving so much more than it has been. For example, the pound-euro rate this year has moved by over 7%.
7%?
So you can imagine how much that can impact people's budgets, especially if they've taken a lifetime to build up, earn the money, pay tax on the money and save the money for that dream property. They want to make sure that X equals Y on their power spreadsheet. So talking early is really important.
So planning ahead is a big factor when making an overseas purchase. A 7% move in anyone's budget, if we look at a 200,000 budget and we call it 10%, that's a £20,000 difference. That could buy you a lot of furniture and many other things, or buy you a bigger property. You may be thinking, hey, I want this and this other property is slightly outside of your budget. Plan ahead, look at the currency pairs, as you call it, I think?
Correct. Yeah, so an example would be, if we're talking about France, in the last 90 days, it's moved from a 3-month high within a cent of the best level in 52 weeks to the lowest level in a month in the space of 7 days.
In numbered terms then, so we've seen a high and a low.
A high and a low, so we've seen a variance in the exchange rate of over 2 cents in the last 3 weeks.
Wow. And if we're planning, how does your firm work? Do you have currency advisors that they get allocated to? So let's say I'm phoning up, I want to buy my dream home, it's 200,000 euros. That covers most of Europe, I think Spain, France, all the European countries. Yep. So euro's the currency.
So if you're moving money internationally, it's worth speaking to a currency specialist. Don't just assume the bank's the right person to go to. As you mentioned, moving this kind of size money that we're moving on a daily basis, we wouldn't be doing it unless we could add value or provide a saving, or in most cases, both. And this is around making the transfers fast, smooth, easy to coordinate, and saving money. A lot of people will generally go, I've been offered X by the bank, what can you save me by? That's an important part, and again, if we couldn't do that, we wouldn't be here. But over and above that is the consultative view around the options you have around mitigating risk and timing that transfer when the market is moving so much.
So we'll look at working with a specialist in your firm, and we'll talk about the plans. If we're going to be arranging a mortgage, which obviously we can help arrange finance in many countries around the world, you're going to have regular monthly payments that you're going to have to meet. So if I'm borrowing in euros, if I'm buying something in France, or if I'm borrowing in dollars if I'm in Florida, and the monthly payments are X, I'm going to have to probably send money every single month. And sometimes with currency fluctuations, there's going to be a good time and a bad time to buy and sell my currency. And it's kind of like working with you. Do I open a bank account? How does it work in this process?
So when you're starting, I mean, if you're brand new to currency, you'll have first off a free currency consultation with one of the leading members of our teams here. And we've got multiple teams who specialize in different areas of the world to help with different items, whether or not that's a yacht, a boat, a house, or whatever item or asset they're looking at buying. And they'll be able to educate them around what's happening in the market, why it's happening and what could happen, and importantly, how they can mitigate that risk in line with the client's own appetite towards risk. So here's some examples. Normally when we're speaking to a client with your example buying in France, the buying process in France to offer into taking possession of the asset is 4 months. In that time, the market can move by a big degree. So speaking early allows people to go, well, I budgeted for X, I don't want it to cost Y, I'll lock in the exchange rate now and buy the full amount.
So you can buy and trade now.
Correct.
In anticipation of when you're actually going to need the money.
There's a few options. But from a risk perspective, first off, clients can go, I'll buy now because I've put my budget in on the basis that X equals Y. That's lock it in. I don't want anything to happen to the budget. I want to be able to afford the property. I'll put the offer in. Others might go, well, I'm 50-50 or 70-30 or 60-40, and will importantly mirror their capital against their risk exposure that they want. Or others will go, well, hang on a minute, I'll pay the bill when the invoice comes round, when the notaire in France asks for the money. Obviously, there's really quite high risk there that X might not equal Y. So they've got to have that conversation to make sure if it does get more expensive, they can still afford it. With regards to the options, yes, first off, people are always surprised. Steve, do I need a destination bank account before I can buy my money? No. We're really heavily regulated here by both the Financial Conduct Authority and the Bank of Ireland, so we can offer an uninterrupted service depending on your residency across Europe, but you can buy and hold funds with us until a requirement in the future. So you can buy and hold those euros ready for the requirement.
Fantastic.
The other aspect we have is a forward contract. So this is a way of buying money. Normally in our industry, there's 2 or 3 different ways or 2 different kind of currency tools people use. They'll normally buy most conveniently on what's called a spot contract. In essence, that's a buy now and pay now option.
So a spot contract is buy now,
pay now. So you need to have the full funds available then to do that within the course of a couple of days.
When you say buy now, pay now, what does that mean? So I buy my euros and I pay for my euros now in sterling.
Correct.
So that's buy now, pay now.
Buy now, pay now.
And that's spot. So spot is today. Right this minute.
Yeah, so you're locking the exchange rate then, and you have to settle within 2 or 3 working days.
Okay.
The other option we have is what's called a forward contract, which is becoming increasingly popular. What that is a buy now, pay later option.
So in your example where the buying process in France is say 4 months, you could buy now planning to get delivery of the euros in 4 months time for when you need them, because the exchange rates and the recommendation is more favourable to transact now.
We'd give the client the information around where the market is and they could take the risk off, i.e. I don't want it to cost more, I don't want to have to delay, I don't want to have to sell another asset or raise more capital. I want to lock it in now and I'll pay for the money later. And you can set up, we can do them for up to 2 years in advance. So normally in that example, we'd go, well, we'll go out to kind of 6 months and they can draw down early when the requirement is needed, pay for partial of the money and send the funds out, whether or not that's direct to the notaire or wherever the money might be going. And we can provide all the relevant paperwork that the notaires or the lawyers will require to make sure that they know where all the money's coming from. So it actually makes it a hell of a lot easier normally than dealing with the banks, because the money gets there quicker, is a lot more transparent, and we can talk the language that those in-territory legal firms need to have from us.
That's incredible. So that's for like individuals. But I imagine if I'm in business and I'm running a company and I'm transacting with various countries around the world, there may be multiple discussions and multiple requirements any one time.
Correct. So we offer services to private individuals that might be buying that property in France, paying for the pool guy thereafter, and all those smaller requirements needed until they sell the property perhaps 7 or 8 years later. But we also do a lot of service from a corporate space as well. So we're servicing corporate business individuals managing their international exposure. And that ranges from, I've got an invoice to pay, I've got payroll to sort out, to a point of I've got tens of millions, hundreds of millions exposure over the next 12 months. How are we going to budget for that at board? We'll provide all the reviews and the options, all the tools that the team need to then take to board to make their decision around the firm's risk appetite, and will in essence be their eyes and ears in the market, informing them around what's happened and why it's happened, to see if that change has evolved and had an impact on their risk, and therefore what their plan will be. So they'll use the same options, the same forward contracts to buy now and pay later in line with the business requirements. We'll use rate alerts, spike notifications, automatic buy orders.
So what's a rate alert and what's a spike notification?
There we go.
Spikes I hear about like drinks, which is a bad thing, but rate alerts and spike notifications, what does that mean? How does that work?
So you've got the spot contract and forward contract that we've talked about.
Yeah.
We'll also, as part of the review, being in essence the eyes and ears for the client in the market, because it's moving more than it ever has done, right? And I can back that up. You know, when I started, the market would move by 0.25% and it'll be on the front of the FT. Now we see that movement from before 9 o'clock. So you can appreciate how much that can impact the client's budget. So that service, being eyes and ears on the market, we're really, really in demand for. With regards to those tools, a rate alert is inform me, let me know when the rate of exchange gets to this, and we'll have another review.
So you may have, as a client or a business, a specific exchange rate that you think is the right one for you, because everyone's got an opinion on so many different things, but you may have a view of, right, if it gets to this exchange rate, I'm happy to do the deal, and by you giving me an automated notification, I can then transact.
Yes, there's other tools which are better still. So from a corporate perspective, and these are useful for individuals as well. So when we're having that consultation, understanding the availability of capital, when the funds need to be there, and what the risk appetite is, you know, we can buy some now and leave some in the market. If we're leaving some in the market, we're having that review around what happens if it goes up to X or it goes down to Y. We can put the rate alerts in, so if it reaches this level, let's have another conversation. But we can do better still. We also do automatic buy orders. So they're called a limit order, which goes above the market. So if the market spokes up, it can take advantage before you miss it. Or what's called a stop loss order, which goes below the market to make sure it doesn't cost more. So we'll have that conversation of what happens if it costs this much. It's going to be a bitter pill for you, but you don't want it to get worse. Do you want to put a guarantee in so it doesn't get any worse from that point? And both those contracts can run at the same time. And in essence, working with your consultant here, that top market and below market can follow the market to try and make sure that you're executing when you get the most for the money.
So it's so vitally important to do your research, work with a specialist, and have a clear plan of when you need to execute.
Correct.
What else do I need to know then? So I'm dealing with a professional firm. I'm going to be going to work in Dubai for a while, let's say.
Yep.
And I'm going to be paid in dirhams for the next 3 years, but I want to maximize any currency I have to send back to my home to ensure I'm getting fair value. Because again, in other currencies and countries, they're more volatile.
Different currency pairings are more volatile. So the dirham is pegged with the US dollar. So when the US dollar moves, the dirham moves by the same degree. So there's a direct correlation between those two pairings.
When you say pegged, what does that mean for those that don't understand peg?
Exactly. Pegged is $1 is always worth X many dirhams. Always the same. So when you're tracking the dirham or other Middle Eastern currencies, a lot of them are directly pegged to the US dollar.
So then should we be monitoring the US dollar? And
it's part of the same conversation, exactly. But what that means is the US dollar, the most safe haven currency out there, investors will have risk on and risk off as well, and they'll apply money into the dollar or out of the dollar, changing its demand and therefore its value, and that can have an impact to the client.
Incredible. So even though I'm working in Dubai for a period of time and I've got my dirhams, I need to be vitally aware of what's happening with the US dollar.
Correct.
Wow.
Correct.
And what are the other major currencies in the world that are pegged? I mean, I know there's a lot of talk about BRICS, which is Brazil, Russia, India, China, and one other I can't think of, where they're trying to move away from trading in the dollar and use other denominated currencies.
Yeah, there's a lot of conversations out there around having gold-backed or other backed currencies outside of the US dollar. Obviously, those conversations are quite geopolitical at the moment and a touch point. And as that becomes more and less likely, that has a live impact on the exchange rate. So that's something else for clients to be really aware of.
Steve, what are the 4 main factors I need to consider when working with currency?
Well, when you're moving currency and looking around, it's really all around what's going to drive the market and impact the budget.
So that's number 1. So what's going to impact and drive the budget with the currency, yes?
Correct. So talking early and not leaving it to the end is really important so you can proactively manage your risk exposure in line with your personal risk and the availability of the money.
Number 2.
Number 2 is dealing with an expert and a specialist that can provide you and guide you with that knowledge and information, being your eyes and ears in the market. It's never moved as much as it is now, and it's not something you can leave to after a meeting. If it's moving, it has an impact on your budget and you need to be aware of it. You need a proactive partner to help you with it.
Great. Number 3?
It's coming down to that ease of that process, and by that I mean ease of contact, personal points of view, all the relevant paperwork for this, and true transparency on where that money transfer has been. A majority of your viewers will have, if they've experienced international transfers through banks before, getting access to the bank, finding the right person, providing with the information, where's the money gone, when is it going to get there? Painful, right? You assume it's going to be easy, but it's not. And that's, again, if that was easier, our industry wouldn't be here. We would be growing the size that we are.
So Steve, number 4.
Number 4 is dealing with someone that's going to provide you full visibility to make the payment easy, quick and painless. And by that I mean when you're moving money internationally and dealing with your bank, they'll normally have a capital control. What does that mean? How much money can you move at a time? Most people go, I'm going to move the money, I'll send you the money today. And we'll go, well, just bear in mind that bank normally limits to this much per day, and you need to plan that into making sure the money arrives where it's supposed to arrive quickly, easily.
So Steve, what drives the market? And why is it so important to engage and plan early with currency?
Here, this is all around what's driving the market and why is it moving so much, as you say. And again, I can't stress this enough. It moves a lot. We're all getting accustomed to the political embarrassments that we're seeing around the world and what's happening economically with the banks changing at the moment in the world we live. And this is having a big impact. Generally, there's 4 main drivers to the market. What's moving it? You'll have an act of terror, Can't do much about that, but you need to respond quickly if we see those unfortunate events. An act of God, by that we're talking about ash clouds, volcanoes, all these kind of aspects that can impact the economic output of a territory and therefore its currency. You've got political events, so a change at number 10 in the UK, what the commentary and speculation point from the banks and central bankers are, that's really important. And then lastly, and this is the one that's most frequently, we're talking about economical data. So economical data, there's about 20 to 30 reports a month for each currency reporting on how healthy that economy is. And that relates to everything from the central bank commentary around forward guidance to how many new car sales have happened in a country. Each will have a different impact on the market, so different presence on how much it will move the market by. But the important bit here is a lot of people go, well, it's expected to be X, therefore it will move. Wrong. If the market expects this result from an economic release, the market will move before the event to meet this. So it means that if the result comes out as expected, you won't see the market move that much. The important aspect is to be ready that if it is different from that expectation, the market will move very quickly to move, hence that spike, hence that movement, hence why you need to have a proactive partner engaging with you and being aware of your circumstance and what you're looking at do so that you can take the most out of it or avoid the risk if the market goes the wrong way.
And also, the other thing I was told with many things is to review. So how often should I review my currency needs and partners?
Well, what you'll find when we're talking to clients, and we get introduced to clients from every walk of life, from every size and scale of requirement they might very well have, they'll all obviously initially think, I'll go to the bank. The bank, respectively, will set their exchange rate for a long period of time, so they're not trading in the live market. We can, as a result, get a lot closer to the central level, providing that financial benefit. Other clients will be using people in our industry, and unfortunately, like most industries, some people apply a honeymoon phase, i.e., at the beginning, the rate of exchange is X, and over a period of trust, it becomes Y, and it isn't as sharp as it should be, and they get a bit perhaps complacent around the consultative element around what the market's doing now. So I'd always suggest review, do a free currency consultation to make sure that you're getting the best for the money that you worked so hard to earn.
That's fantastic advice, Steve. Thank you very much. So as always, please like and subscribe. It's so important to me and the channel. If you want to reach out to Steve and his team, his contact details are below, and he'll be delighted to assist you with all of your currency requirements. Thank you.